A very good afternoon, good morning. Welcome to HYCM's live market analysis with myself, Giles Coughlin, Chief Currency Analyst. Very glad you could make it. Looking forward to taking folks through the session and making sense of latest market moves. So I'm going to key you into the key narratives and explain what's been going on. So just as folks are coming into the webinar, just to make sure that the purpose of this webinar is educational, so it's not a signal trading service. So even though we do talk about different instruments for trading, different entries, exits, it's all from an educational perspective. The idea is you look over my shoulders, and with a professional trading background, you see how I go about making trading decisions, and the idea is that helps you inform your own decision-making process in time. Those regulars who attend regularly are aware of this. The key aspects we're going to be looking at during the webinar are a few key topics as well as a few key events. We'll just go through what's to getting ready for Jackson Hole. That's the big event this week. We will look at that in some detail on Wednesday. Also, we'll have a look at gold. I'll just explain what's driving gold and why the Fed is likely to be the next catalyst for gold prices. Also explain why we're seeing a little bit of upside in gold now. Also look at German PMIs. We have had those out, and I'll just briefly explain they are not a worry to the ECB after just having those in this morning. Inflation's back in focus, so we will be taking a quick look at that, but we'll also be updating ourselves on what's going on with the Fed, particularly how the US dollar is being driven by Fed policy at the moment. So that's really what we want to keep our eyes on and keep focused on this week. But inflation can all of a sudden become a major driver. So we'll explain what's going on with that. And we'll start by looking at the stock market and the overall outlook for that, and why we've suddenly seen risk sentiment go from off back to on so quickly. I think that's tentative that it remains that way, but I'll just explain what the rationale is for that. Okay, folks, just going to go over to the other screen. Great, that's super. Okay, taking a look here at global indices futures, you can see that they're all tracking higher. ASX is a little bit pressured, but that's making sense because the COVID-19 cases are continuing to track higher in Australia. So makes sense that the ASX 200 is just struggling a little bit. Now, the outlook for equity markets, you remember last week there was a deeper correction going on, and there were concerns that as the S&P 500 was falling in global stocks, that there would be that 5 to 10% correction. If you see marked on the chart, you can see here, this is a 5% correction and that is a 10% correction. At some point, we are expecting global equities to correct. And you can just see we have had a bearish candle last week showing that the prices haven't kept moving higher. So there's one chart that really shows the overall concern that's going on. And it's this chart here. I'll just show you. If you look here, you can see a number of major markets. So we've got volatility in the green. We've got the dollar index purple. We have 10-year yields in the blue. Copper in the light blue, and then we have Australian dollar, Japanese yen in the orange, and the S&P 500. Now, do you see how a number of these markets have been tracking lower? Copper moving lower, iron ore prices moving lower, 10-year yields still finding bids. We've had the VIX trending a little bit higher. That tends to weaken global equity. So a number of major markets just sending some warning signs out. And if we take a quick look at copper prices, I'll just show you here. What you see is copper prices just pulling up into that key 4.25 region. So if you just take a look here, you can see that break of that trend line last week, that's bearish. Now, if copper prices push back above and start moving higher above that trend line, that's very positive for risk. If this 4.25 region holds, that's negative for risk. So we're right back to a key level. And if we push above here in copper prices, that is very positive for risk sentiment. So that's one market to really keep an eye on. In case you're not aware, one of the nicknames for copper is Dr. Copper. It's called Dr. Copper because it gives an indication of the overall health of the global economy. Now, if you think about it, copper is one of those commodities that is used when the global economy is growing. If you think of building work, if you think of vehicles, anything that involves conductivity, electricity, buildings, it needs copper. And copper is a key commodity that's associated with growth. And so when the world is growing, copper prices are rising. When the world is shrinking, copper prices are shrinking. So that recent collapse in copper prices back down to that key support level has found buyers. Get back above this level and that keeps the risk sentiment positive. Now, let me explain to you what's happened with risk and then you'll understand what's going on. So going into the end of last week, we saw the dollar pushing higher, okay? Now, the dollar was pushing higher because the Federal Reserve is expected to taper bond purchases and expected to give some kind of announcement at the end of this week. It's what's called the Jackson Hole Symposium. It's when the Fed are meeting. Now, there is a member of the Federal Reserve called Kaplan, and Fed's Kaplan said some quite negative things on Friday. What he said was that, you know, if the rise in COVID-19 cases start impeding growth, then tapering might be slower. Now, Kaplan has been very vocal. Please excuse my yawn. Fed's Kaplan has been very vocal. He's been wanting to push ahead with tapering. Now, all of a sudden, he's making dovish signals. And those dovish signals has meant that the dollar found some weakness on Friday. And I was speaking to a number of traders and investors and was, you know, making that case for that pound US dollar, New Zealand US dollar upside. And I've been also talking to traders this morning about why this could potentially boost gold higher. I was expecting gold to boost higher. We're seeing that rip higher from that break of that Harami inside bar back up towards that 1800 level. And we could well see some further upside in gold. Now, if you just take a look at gold on the weekly chart, what you'll see is this very strong bullish signal. This is a huge tail. We have a bullish close within the body of the previous candle from key support. That is a very bullish signal and is signaling a potential move back up towards that 1820, 1830 region in the near term, and then up to 1880, 1900 in the medium term. Now, that's a technical signal. What will be needed is the fundamentals to come in line, and that will need a bearish Jackson Hole meeting. So if the Jackson Hole meeting push back against against tapering, they're saying we need to be cautious, then that will weaken the dollar further and that should boost gold higher. So that's one thing that I'm looking for. I took a slightly speculative long on gold just on a break of that inside bar on the dollar weakness. Gold's very sensitive to the dollar at the moment, and that dollar weakness has just boosted gold higher. And I'll just show you here. You can see here that when real yields fall, okay, that sends gold prices higher. So at the moment, we've got dollar moving lower, and that is just a little bit of an uptick in gold. So I'm taking a bit of a speculative long on gold on the basis that perhaps the Federal Reserve will be more bearish, and that will boost gold prices further. 10-year yields are still rising to the upside, so that is a negative for gold. But in the very, very near term, I did like a quick gold long, just on that technical break and on the dollar weakness. So it's not a trade that I've got a massive conviction in, but it's a trade I'm expecting the Jackson Hole Symposium to be more bearish, and I'll show you why. Look here with me and look at the difference between the UK and the US in COVID-19 cases. Can you see here? When COVID-19 cases in June, there was only 12,000 per million cases in the US as a 7-day rolling average. So Fed wasn't worried about COVID-19 in June. They weren't particularly worried in July, right? But this is what's going to get them worried, is we're now 140,000 cases per million, and look at the death cases. Deaths are rising. And unlike the UK, I'm living here in the UK, yes, we've got rising cases, but although deaths are rising, they're rising very gradually. They're not rising in the same way that they were in those previous spikes in November and the turn of the year. So deaths are slowly moving up. And the difference is very high vaccination rate in the UK. And that is helping UK. Now, why there's a difference in the UK and the US, I'm not sure, because the US have also got double vaccinated a lot of their people. The only thing I would speculate on is potentially weight. I know weight is a risk factor, and folks tend to be bigger and heavier in the US. I haven't read anyone who said that at all, so that is just pure speculation. But the important part is this. It's that this is likely to concern the Fed. Are the Fed going to say we're going to taper early? I don't think so. So certainly expectations of dollar weakness into the Fed make sense. But what we have to look out for is Fed speakers. So looking at Fed speakers as we go into the week will be important to see if they confirm or deny early tapering. On Wednesday, I'll go through this in significant detail so that you're not in any doubt about what to look at. Very briefly, the hawkish outcome is if there's an unofficial hint of tapering decision in September, dollar upside, gold lower. Anything that suggests the pace will be quicker than 10 billion bonds and 5 million in mortgage-backed securities, that would be upside in dollar, downside in gold. If they downplay current fears about slowing growth, upside in dollar, downside in gold. And all of these scenarios are downside in equities. Now, the reason equities will fall on the idea of bond tapering or asset purchases being removed quicker is because when interest rates rise, that means future earnings for companies become more expensive because their debt becomes more expensive to manage. So future earnings are hit, and earnings are already very highly valued, and that means that future profit is much harder for companies, so equities tend to fall. Now, this is what I'm expecting, but of course I can be wrong, and I'm always prepared to change my mind. But if there's a dovish outcome, then I'm expecting no hint of tapering in September. The pace is likely to be this level. If it's even slower, that would be again more dovish. And if they express material concerns about slowing growth fears, COVID-19 fears, so if there's more risks, then that's gold upside, US dollar weakness, upside in equity. So this, because this is being anticipated after Fed's cap plan, that's where we're seeing gold rising today, dollar falling and equities rising. That's the mood that's got the market, okay? And remember, the market's always trying to work out what's going to happen next. It's, you know, that's the way markets work. And remember that when the global economy is doing well, the dollar tends to weaken. Now, the reason for that is quite simple. The world's reserve currency is dollars. And if the rest of the world's starting to grow, then you see outflows of US dollars from the US into the rest of the world. And so dollars end up being sold in exchange for other currencies and other instruments and other products. So when the world is doing well, you tend to see the dollar fall. Okay, so at the moment, the downtick in the global economy, we've got slowing growth in China, falling iron ore prices, falling copper prices. These are the concerns, yada, yada, yada. That's why we've seen some dollar strength. So that's the sort of a medium-term picture, and that's why we're balancing narratives. So that was the reason why a very short-term gold long just made sense going into this week. And Harami inside bar is a very nice setup. If this breaks and closes above, and as long as the sentiment remains the same, then you'd expect buyers from a return to that 1780, 1790 level. Okay, this is a Harami inside bar. When you get a Harami inside bar, they tend to be quite powerful technical setups. I'll try and show you another one. You see here, you've got Harami inside bar. See, it breaks to the upside. And that becomes a natural support level. I'll try and show you another one. That's a Harami inside bar. You see it breaks to the upside, retests the inside bar, holds. Harami inside bar breaks to the upside. Harami inside bar breaks to the upside. You get the picture? So this is a Harami inside bar. Now, not just trading the technicals, but the dollar weakness is expected at the moment on Fed's Kaplan's comments. Now, it could change. If another Fed speaker comes out and starts to reaffirm that surprise tapering is coming, then expect that outlook to change. But for now, you know, short-term upside from 1780, 1790 makes sense. See, what I'm trying to do and what I hope to do is I'm hoping that the Federal Reserve are dovish. And if they are dovish, then I'm looking for a retest up to that 18, 19, 19, 100 region and looking for a break of that trend line to the upside. So that's the logic. Okay, I hope you can understand what's going on now. And I hope that's made sense of the market. And I hope you can see very clearly why that's driving things. Now, one of the things going into this meeting was how would manufacturing and services be in Germany? Germany is the leading country in the Eurozone. So if there's a significant miss in German data, that weighs or supports the euro heavily. Now you can see French manufacturing was good, French services PMI good. Now German manufacturing was still in expansionary territory, so you can see it's still above 50 and moving higher, but less than expected a miss. And flash services PMI, at least they were above expectations. So both manufacturing and services in firm upside. Manufacturing to the upside for the UK, a bit of a miss in PMI. Nothing here is going to change the ECB's outlook, but it will be very interesting to see what the ECB do coming into the next central bank meeting. We also, it's very interesting to see what happens with the UK. We have a broad bullish outlook for the pound, but if we start getting data points missing for the UK, that's going to be an ongoing concern. Aside from this data out, yes, we have some, if we have a miss in services and manufacturing PMI, that is going to give the dollar more weakness, and that will increase expectations of no Fed tapering. So look for a weak reading here to give gold another boost higher potentially. Tuesday, really not much on at all. Keep looking at the risk tone. So how are equity markets doing? How are commodity markets doing? How's the bond market doing? All these, interact and influence the FX markets. Wednesday, again, really not very much at all. The durable goods orders are mildly interesting, not expecting that to be a market mover. Oil inventories, they can be important. If there's a bigger draw than expected, that can really boost markets. You can see that there's been quite a lot of draws for quite a few weeks, and a bigger than expected draw will boost the oil market. Jackson Hole Symposium is kicking off on Thursday, and the Fed's Powell is due to speak on Friday. Now that timing could change, but that's going to be the real big meeting. A lot of traders will just be not trading very much at all into Friday, but I think definitely it's worth looking at potentially some gold upside on dollar weakness, depending on what the Fed speakers say. That's what will invalidate the outlook. And the inflation data also has the potential to shift the US dollar. If this inflation data goes very high, and if the core reading, which is the Fed's preferred reading, starts pushing above 0.6, 0.7, then that's going to get the Fed's attention. So you could see quite a choppy day on Friday, because you could get a high PCE reading, sending the dollar higher, and then you could get a dovish Powell sending the dollar lower. So you've got to watch out for that price action on Friday. And the expectations are that I think Fed Powell is going to be more dovish. Now, what you've got to keep your eye on is these COVID-19 cases. So the more the COVID-19 cases and the deaths rise, the harder it will be for Jerome Powell and the rest of the Federal Reserve to be more hawkish and optimistic. And remember, the actual meeting itself is now a virtual meeting and online. So that in itself tells you the situation in America, that even the Federal Reserve's meeting is taking place virtually. So that shows you that they are struggling again with COVID-19 cases, hospitalizations, deaths, sadly on the rise, which means the Fed are unlikely, in my opinion, to start announcing early bond tapering. Now, of course, they could do, and if they do, we'd expect to find dollar strength, 10-year yields higher, dollar yen upside, equities lower, gold lower. But you can just see the market, and especially at the moment, you can see the market sort of expressing its view with that weak dollar story. See dollar index pushing lower, that's helping the pound, New Zealand US dollar, Euro US dollar, all being held higher just simply on that weak dollar. So this level will be key on the dollar index, this 93 region, get back below there, and we could definitely expect some more downside in the dollar index into Friday. But again, looking at those speakers. Okay, folks. See, aside from the things that I've already mentioned, it's quite a quiet week potentially. It's just a lot of focus on Jerome Powell and the Federal Reserve at the end of the week. So don't be surprised if we see some quite cagey price action going into the week. And again, you can just see gold pushing up towards that 1800 handle. You know, this is going to be a key level. You know, the other, you know, get and stay above this level is definitely, you know, a bullish development if price can get and stay above this region, 1800. That does really open up good potential upside in gold. So break that level, you could expect to find buyers on a break and stops being triggered. Okay, folks, if anyone's got any question, please do ask away. Happy to help with questions. Yeah, thanks, Max. Right. Max says that even if Powell disappoints and is dovish as expected, we should still see dollar and gold volatility. If Powell is dovish, at the moment, we're going to need to see what happens in terms of how far this dollar runs. Because at the moment, I'm seeing the dollar push lower. Okay, now that's on the back of Kaplan's comments last Friday. So this is almost telling me that, you know, question, is the market pre-positioning for a dovish Powell? I told you what I thought. I showed you these two charts. So I think investors around the world are looking at, obviously we're looking at the same thing, and that they're poised towards a dovish outlook. So what I'm trying to say, Max, is if this dollar keeps weakening, if it weakens, you know, Tuesday, Wednesday, Thursday, Friday, and it's sort of right down 92 or something, and if gold has moved up significantly higher, and you can just see it, you know, it's on a bit of a rip right at the moment, then it's going to be a potential for buy the rumor, sell the fact. So we just need to wait to see what happens. The bigger the surprise, the better the trading opportunity. Yeah, I think, Max, you summarize it very nicely. Kaplan let the cat out the bag, says Max. A perfect expression for this situation. Yeah, he did, didn't he? And it's a great example of how trading a dovish, you know, a hawkish bank member has said something dovish. And that's a perfect example when a hawk becomes a dove. Now, if I just show you my Twitter, make sure you follow me on Twitter, because I do keep some stuff, good updates coming along, particularly on a Friday. I'll just show you here a link. Stocks find bids as Kaplan flags Delta COVID concerns and risk-off tone moderates. So that's what came in on Friday, right? And I mentioned Kaplan's dovish comments open up short-term move higher for the FTSE 100, and Fed Kaplan's comments opening up short-term pound and New Zealand US dollar upside, and risk off tone moderates as Kaplan sheds doubt on COVID-19 path. Okay, so these little videos that I was doing, and I'll just send you that. I'll just send folks the link to one. I'll just send you a link, and you know, if I send you this link, you can follow me on Twitter. You know, I'll send it to everyone, Max, and send it to you as well. It was a clear, what I'm trying to say is it was a clear shift, right, on Friday. And it's not a surprise, the price action that we're seeing now is not a surprise at all. Okay, folks. Yeah, great expression, Max. I like it. Any other questions that folks have? Please do let us know. Excellent, Max. New Zealand dollar. Now, that's a really great question. Now, I have been very dovish on the euro New Zealand dollar pair for a while, right? And I was really wanting to short the euro New Zealand dollar, and I've been really wanting to short the Australian New Zealand dollar. Now, if you put a gun to my head, I expect the Aussie New Zealand dollar to keep tracking lower. Now, if you look at the bond yield spread between the Aussie 10-year and the New Zealand 10-year, okay, you can see it's tracking lower, okay? I would short the Aussie New Zealand dollar if we move back up to that 106, 150 region. Still, I would. I'm not shorting the euro New Zealand dollar, Max, and it's for this reason. I don't like the rising COVID-19 cases in New Zealand. Now, on the face of it, the Reserve Bank of New Zealand, what did they say at the last meeting? They're going to hike once this year, 4 times next year. And Governor Orr said that, you know, his positive outlook has not been deterred by, you know, a few COVID-19 cases. I get it. It's bullish New Zealand dollar. The ECB is much more slightly weak bearish. So I'm expecting euro New Zealand dollar selling, and as you know, I was selling euro New Zealand dollar from this level back down lower. Okay. Now this sudden shift back up through that trend line was when there was a COVID-19 case discovered in New Zealand. Now, unlike other countries, New Zealand is going for an elimination policy. So they're not trying to live with COVID-19 like the UK. In one sense, in the UK, you know, ho-hum, more cases. It's not great news, obviously, but hospitalizations and deaths are our focus. Now, New Zealand, but we vaccinated about 75% of the UK population here. New Zealand vaccinated about 18, 19%. So they are vulnerable to the spreading Delta variant. I don't like it, Max. So I could see the euro New Zealand dollar trace keep trading high. Now, a key place to manage risk is this trend line, you know, stops running just above that 1.7172, you know, the tech, like say people were, you know, they really wanted to short this, then this is the way to do it. Like, it's to short at market, stops above 1.7180, right? And that should fall. And the only thing I don't like is the dollar weakness gives the euro a bit of support. Don't like it for that reason. And the uncertainty over COVID-19 cases, I don't like that. Now, what would change my mind, Max, would be if all of a sudden COVID-19 cases are more sorted in New Zealand. If New Zealand gets on top of it, then I would be likely to short the Aussie New Zealand dollar pair. That would be my expression of weakness, because I'm expecting New Zealand to do much more hiking much sooner than the RBA. So I'm just pausing, Max, for my bullish outlook on the New Zealand dollar. Although it's still there, it's the rising COVID-19 cases I don't like. So if PMI came out and said, we've traced every single person from the outbreak, we're sure we've got this under wraps, another week and we'll be done. If there was that going on, I'd have more confidence. So in other words, I would consider coming back to buy the New Zealand dollar, but for now, I'm just cautious. And I hope you can see the reasons for the caution. I hope that's made sense. Good questions, Max. It's a great, yeah, the COVID elephant in the room. And particularly for New Zealand, they're dealing with it differently, and that Delta variant is extremely communicable and didn't look good. Remember those 35 people that had COVID, like one had been to a ball with 1,000 people, someone else had been to some other sporting event, you know what I mean? The people had been really in and out amongst the community. It wasn't a question of, some people who were maybe like housebound and they just happened to get COVID-19. This is people who are, the life and soul of the party, they're at all these events, balls and everything. So I wouldn't be surprised if that cases come higher. And over the weekend on Friday, I was warning people that I could see COVID-19 cases rising in New Zealand. They did. So my view could change quickly, Max. For sure, it could change quickly. Yes, I think that's sensible. Pound New Zealand dollar long. I like that. I like Euro New Zealand dollar short too, and I like pound New Zealand dollar long. And that, let's have a look if there's a. Take a look at the technicals there. Yeah, see that rejection, double top. Yes. Okay, I'm not so sure, Max, because the outlook for the UK is good, outlook for New Zealand is good. If suddenly the situation for New Zealand deteriorates, then pound New Zealand dollar upside would make sense. Yeah, I've got you, Max. I followed your logic. Took me a while, but I'm there. I hope, folks, you can see what's going on. I hope that you spent the time at this webinar and you think, do you know what? I can see why gold is breaking out. I can see why Giles was long from 1780. I can see the logic. That's as much as anything that I'm trying to get across. Because once you get that logic, then you can start seeing these things yourself. I can see why the dollar's falling from Friday because of Fed Kaplan's comments. Once you see those things, then you're trading how like 99% of professional traders trade. They're not sat looking at the chart and going, oh gosh, I've just made a higher low, or that's a breakout, or that's, they're not just looking at technicals. That's what many retail traders get deceived on, essentially. Deceived is maybe too strong a word, but it's only one aspect of trading, technicals. And for you who've been following me regularly, you know how much I love technical trading. I love it. But always in line with the fundamentals, which is what's driving me here with this gold long, is that, that very bullish signal, technically. Now got Kaplan's comments. That's the dollar weakness. And then just seeing the false break of the Harami inside bar, you can manage risk. Like, risk is there at 1773, and that's all you need to be. You don't need to be right down at 1670, you see, because the technicals, technically, I know that level is solid. Now, of course, does it mean your stops won't ever get hit? Of course not. But it does mean you're defining and limiting risk in the right places. Folks, been a pleasure. Please take care and make sure join me on Wednesday. We'll really dig down into that FOMC and we'll get ourselves ready. So thank you all very much. Take care and have a very good rest of the week. keeping an eye on the risk tone. But yeah, you're welcome, Sarah. You're welcome, Max. Thank you for your questions. Thanks, everyone now. Goodbye.